So that only leaves gold, which obviously followed the market. It followed dollar and the yields, and a bounce of that 1970 level, which you talked about in yesterday's video, uh, and moved back up. So uh, the fissure for gold was already bullish from a few days ago, last week. Uh, the breakout happened early this morning, eh, late last night, US session closing hours, and then since then it moved $14. About. So it's a pretty simple trade, but we talked about this yesterday. Gold being again coming back if the dollar did not move back above that 103.7, 103.8 mark, and which it obviously didn't do. On the daily, the gold is still on the bullish side. A lot of like smaller bodied bar like dojis, but not completely dojis. This is a kind of an inverted hammer. It's so these kind of signals are are not that don't always work. So, but yeah, on average, if we look at the 4 hour, it's a pretty simple trade from last week as well. The price is moving up. The price is bouncing on 50-day moving average. The price is a lot higher from the 200 EMA itself. We talked about all these levels yesterday, which this chart was said also. As you can see that this is all yesterday's markings. That 9071 mark was the uh, 50 EMA, which, uh, as we can see, was tested like nothing else. So it got tested for 2 hours, and it gave it the follow through for $15 upside. So that's pretty interesting as well. But as you can see, the RSI on the 4 hour is getting closer to the 70 mark. The MACD is just changing colors, but yeah, it's also getting on the upper side, higher side. The Bollinger Band has kind of being covered through. So that's this is two standard deviation on the Bollinger Band at 1997. So even we talked about last week yesterday on the 2008 2009 mark, mm, before falling through. It could take a little bit of noise before we get to that level. So it can be active. It can adjust that Bollinger Band. It can adjust these other indicators as well. It can stabilize the price and then move back to this 2008 mark. So apart from this, obviously we need to follow the minutes. Apart from the minutes, we need to follow the other releases from the jobless claims tomorrow to Friday's PMIs and other indicators that are going to be important going forward. Next week also, not only this week, because it's it's a tough situation that is facing. As I talked about it also yesterday, the 2000 mark is not something that is easily broken, and we don't have that kind of pressure when the previous periods we go through where when price was at 2000 was not straightforward. They had some complications which you obviously don't have yet in the market, because this market, even though it's expecting a recession, is not in any kind of pressure. The markets are rallying, everything is safe, the mood is risk on, but still gold is tracking higher because it has that demand, because the problem is not one in one specific sector. The safe haven appeal is coming from a cross level, which we don't really see in the market. It's some of it, it's geopolitical tension, some of it is economical tension. So all kind of things are mixing in when uh, talking about uh, talking about gold, obviously. So uh, in any case, if we also look at the net positions, it's also increased quite a bit over the last 1 month, or more than that. So it was at 93,000 net. No, sorry, this is long position. So the net position for managed money was at negative. It is also still negative. uh, no, it's turned positive, 64,000. So that's quite high. But as we can see, it's last in the last week it has come down a bit. So this is from November 7th to November 14th. It has come down a bit. Might come down a little bit more this week also, because, like I said, the safe haven this market does not need to uh, get itself attached to that safe haven appeal. But a lot of things are happening, and that's why gold is still up. Also, we need to keep our eyes on the yields, which are very very cross at the moment. It's not looking good for the 2 year. uh, even if the 2 year is stable, the 10 year is falling, and newer lows are repeatedly being made. So that's something that is also uh, pushing the gold up. In any case, that 2008 mark is going to be the next, could be the next target, even if the price is still quite far below. And any consolidation at the current level should be above 1985, 1980. Price is lower than that to open the downside again. Yeah, but uh, in any case, and if you have any questions, uh, just I'll be I'll be there. Thank you. Thank you.